The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, and your retirement on the show. Our show is all about saving money, building up wealth, and understanding the world today. Our motto and our philosophy is to save aggressively and invest conservatively. Save aggressively, invest conservatively. That's the key to building up wealth over the long term. You always want to start it out with your qualified savings plans. If you put away $10,000, you get a $10,000 tax deduction. The $10,000 grows for the next 25, 30 years tax-free. And then when you take it out, you're taxed on it at that time. That's about the best deal you can get anywhere. I often talk about Warren Buffett, and one of the things, if you study Warren Buffett, one of the things you realize pretty quickly is that Warren Buffett did everything he could do to reduce taxes. He went so far as to purchase an insurance. That's how he got in the insurance business, because he realized he could grow his money tax-free in the insurance company with using some of the tax advantages there. And it's kind of what started Berkshire Hathaway. And he oftentimes, if he sold a big position, he would swap it out. If a company bought it for stock in the new company, he never liked to pay taxes. As much as he loved to say that he paid lower percentage of taxes than his secretary, the truth of the matter is nobody did more to reduce their taxes in Berkshire Hathaway than Warren Buffett with Berkshire Hathaway. And so the government gives you this for free in an IRA, a 401k, all these qualified programs. So take advantage of it. Now, I'll tell you what, we got a lot to talk about on the show today. Another just incredible week in the markets. And I don't even know where to start. The big news this week, well, actually, there was big news all over the place, but huge correction in the precious metals market after a blow off top in the sector, and if you look at it, it still looks. I think it's still going in good shape. We're going to be talking about that in the show. And what triggered it was is that President Trump announced his new Federal Reserve chairman pick, Kevin Warsh. And let me get some coffee here. So this is the timing is very interesting. I'm going to cover that in a minute. This is a big deal. I mean, I think Kevin Warsh was always the most likely one. I think the other ones were somewhat red herrings. I think he put some of them out there that seemed more dovish to make Kevin Warsh look hawkish. And Kevin Warsh is not as hawkish as people think. It's a fascinating pick, and I think it's classic Trump second term. I mean, we've said this before. I don't think anybody has built a cabinet of the quality of people that President Trump has doing the things he has since Franklin Delano Roosevelt. I think that's his model. He's brought in very powerful people. He's got Secretary of State Rubio. He's got J.D. Vance, who was an incredibly accomplished private equity person. Actually, people remember him for the book Hillbilly Effigy, but really, he was a senator, but he made a fortune in technology, and then he very, very bright individual came in. We got Senator Rubio, again, doing an incredible job as Secretary of State. You've got Howard Lutnick in there. He's Commerce Secretary. The energy, I forgot the energy guy's name, but I saw one of the cabinet members made some remarked about they wanted them to be the energy secretary, and he said, "No, I'm not. I'm not interested in that. I don't think I'm suited." He said, "The guy you should talk to is this guy here," and I forget his name, but he's a graduate, I think, of MIT. Actually worked with the government in a nuclear situation, made a fortune in the oil business, and again, another brilliant person. If you look at RFK Jr., a complete game changer in health and human services, finally getting control of the regulation that's basically been controlled by the drug industry, and to try to improve people's health with the massive health crisis. One pick after another. His Fox guys are so, but he likes to have them because he thinks they communicate real well with people. But I could go on with a list of Kash Patel. A lot of these people are just very, very smart. Tom Holman. He brings in Wyckoff, the billionaire friend of his that has done an incredible job negotiating with the Middle East peace deal with Putin. I mean, this is a world-class seminal cabinet he's put together that is an absolute game changer. Secretary Bissett, absolutely brilliant individual, and he started out with George Soros, who he's really kind of like Dr. Doom, but George Soros was one of the brightest investors and traders in understanding of big currency moves in the world. Secretary Bissett was right in the middle of crashing the pound, and actually it's kind of set the thing up with Soros. And so these guys are very good. You look at Kevin Warsh. Kevin Warsh, he works for Duquesne Capital. Well, who's Duquesne Capital? Well, okay, let me give you some background on him. He's a graduate, I think, of Harvard. I'm not sure actually where he's one of the schools up there. Very, very bright individual. Has a law degree. Was the youngest back in 2011. I think he was from 2006 to 2011. He was appointed to the Federal Reserve Board at the time, the youngest person appointed serving on the Federal Reserve Board. He worked for Duquesne Capital. Duquesne Capital is the family office for Stanley Druckenmiller. Again, one of the brightest minds on Wall Street. Stanley Druckenmiller is one of these guys that he makes money when markets are going up. Sometimes he's wrong and stuff. He's admitted where he made mistakes. But then he manages to make money in markets that are going down and in crisis markets. And that's a rare talent that can do that. There's a million people out there that can make money when the market's going straight up. But when things get bad, that's who you know who's really good and who is. And Kevin Warsh, if he's working with Druckenmiller, Druckenmiller's got the brightest. Everybody out there wants to work with Druckenmiller's returns were about, I think, 28 to 30% a year under his hedge fund. Almost nobody was close to him. And he made it numerous different ways too. And so what Kevin Warsh wants to do is he wants to come in and restructure the Federal Reserve. He wants lower interest rates, but he doesn't believe in quantitative easing. And this is an important thing because over the last 25 years or so, about 25 years, every single time there's been a crisis, the Federal Reserve starts taking on additional debt on their balance sheet, flooding the system with money to stabilize the equity markets, and the markets go up. And so we've had a huge run. The United States is the best stock market in the world. I mean, it's reached the point in the United States of America that the stock market is so good, we don't need you. I'm talking about the listeners. We don't need workers. We don't need anybody. Okay, we have a stock market that's a perpetual motion machine that's gone straight up, and so we really don't need factories. We didn't need factories. We don't need schools. We don't really need anything. We just need money to keep pouring into the stock market. The market goes up and everybody gets wealthy. Okay, that is changing. That we've said this for a year or so. We said it back in 2022. In 2022, we said the 60-40 is dead. The 60% stock, 40% bonds. To be fair, we use that, but we have derivatives. I mean, not derivatives. We don't use derivatives. But we have different. We're in overseas and we're in commodities and things to diversify the risk for our clients and understand that. But but that's what's been going up, and so companies have been buying other companies. They've been cutting costs. They've been firing workers. They're closing down factories. If you got 2 or 3 factories making the widget, you close down one of them, and then you fire a bunch of workers, and then you make them a little more efficient the other one, and you reduce the cost. The earnings go up, the stock goes up, and then you buy back more stock, and you buy back more stock. I saw a thing that I think in the last 20 years or so. Apple Computer has bought back up $700 and something billion worth of stock, which is almost more than the capitalization of 88% of the companies out there. 88% of on the S&P 500, and so. This thing it's been wonderful, okay? It's been a perpetual, but that's coming to an end. We're shifting. That's all Keynesian economics. Flood the system with money, print more money. Look, the world's onto our game. It changed when Joe Biden went all in on the Ukraine war. They were going to take out Putin. He bet the dollar and the dominance of the dollar and the financial system in the world on it, and he failed. And countries were shifting out of that. They started moving into gold. They started moving to everything. Everybody sees that the system of printing money and $38 trillion worth of debt in the United States, and the minute the stock market goes down, 10 or 15%, you flood the system with more money, is failing. So they have to come up with a new solution. So you look around the world, and what do you see? Well, the one country that seemed to do really well was China. How did China do that? And what China did, it's rather fascinating, is they basically stole our factories, they stole our technology, and they just moved it over there, and they just used the same. They built the same factories in many cases, but it was really great because they could pay their workers, and Chinese don't make as much money. But it was even better than that. They didn't have to obey any pollution laws. So basically, we shipped the factories, all moved over there. China had economic growth from about 1995 up to about 2008 with the hiccup, and then it kept going again until it really fell apart in 2020. And then they've got problems now. But that's the model. That's called supply. Hey, let's put factories in. Let's build things. Let's make things. Oh, here we're making planes. Here's a plane. Give me $200 billion for the plane, and then I take that and I go buy $50 million worth of more commodities and stuff and make another plane, and then make more profits that way versus buying the company next to me and closing down the factory and basically making the same amount of planes but more money. That's the difference. And so what Kevin Warsh wants to do is they're more supply side. So Kevin Warsh is not for building up the balance sheet to support Wall Street. They want to have lower interest rates on the short end of the curve to fund the deficit. They want growth, and they want the money not going into Apple buying more stock, but they want money going to Apple building more factories in the United States. That's a fundamental difference. They want, it's the same thing with Microsoft and Meta and all the others. So rather than sitting there and spending your money on stock buyback programs, you're spending money on building out AI centers. You're hiring people. And so what you're doing is you're rebuilding the economy from the ground up. So we're going from Keynesian economics, which is spend money, the government gets out more money, spends more money, our deficits get bigger and bigger, we're spending 6% every year deficit of GDP, to, hey, let's build factories. President Trump has factories coming in, and he's got over $500 billion worth of factories coming in. That, we believe, is a very low-ball number we're using. We think it's very low ball. He just told the defense companies, he signed up a deal with one of them. He goes, look, we need more. I think it was the THAAD missile program from, I believe it was Raytheon or one of them. I forget which one it was. But he said, okay, here's what we're going to do. We'll change up the contract, but you have to agree to spend money on building more, more to expand the production, put another plan in. They said, okay, we'll do it. On the conference call, all of a sudden, they're not talking about buying back stock. They cut back. Some of these companies are cutting back their stock buyback programs, and they're talking about, hey, we're putting a factory in here. We're putting a factory in here. We're increasing production at this plant. So the United States is restarting its industrial might for the first time in 35 years. And that's what you're seeing. And Kevin Warsh is an integral part of that because he understands that. Because between Kevin Warsh and between Secretary of Treasury Bissett. These guys understand, and they can help navigate through this. And when there's a crisis, they'll be able to get us through and keep the manufacturing going. And that's the direction, and that's the important thing you have to understand is this is a fundamental shift. This is why commodities and things are so exciting. So let's take a quick break. I want to talk some more about this. Again, huge week in the markets, the things happening over the weekend. We'll be right back talking this right here on the Max Out Savings Show.
If you've got savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com. Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
I'm Ted Gioka, and I approve this message.
Inflation, instability of the market, bonds, precious metals, oil and gas, and lack of old-fashioned cash puts your retirement at risk. It takes a different type of portfolio to deal with these issues, and that's where Ted Gioka can come in, and he can help. Go to maxoutsavings.com and schedule some time with Ted. That's maxoutsavings.com. And listen to the Max Out Savings Show every Saturday at 10 a.m. on AM 1070 and FM 103.3. The Answer.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. I'm talking savings, investments, and your retirement here on the show. And you give us a call at 713-339-1070. I believe we have a caller. Welcome to the Max Out Savings.
Good morning, Ted.
Morning.
I have a question. Obviously, when the president announced his pick for the Fed chairmanship, the metals markets tumbled. What's your outlook on silver and gold going forward in terms of, do you see a continued slide, or do you see eventually somewhat of a recovery going back up?
That's an interesting question. This week we lightened up on our precious metals, particularly the silver area. Earlier in the week, we actually sold a little bit on the gold side yesterday. not just kind of pull it down. We're kind of just reducing the exposure to some extent. It got to be such a big part of the portfolio. We had to kind of manage it. And we've been doing that here for a couple weeks now. The silver is really a parabolic move, and that had to correct. It ended up down. Just to give people an idea, this on the silver. Pull that up. It was down $31. It hit 120 Thursday, and it went as it went as low as $75 on yesterday. I mean, that's the type of move within 2 days. It was down 27%. It was it was kind of a blow off top. I don't think this is over yet. There's still massive demand for silver and gold. But the gold was a little different. The gold was down about $500, down 9% after topping at close to $5,600. Ended up at $48.90, almost $4,900 an ounce. A couple thoughts on this. I think we own some of the things like SLV, PSLV, GLD, a lot of BAR, BAR, which is the gold. Those last two are the gold ones. I think gold is going to kind of plateau right in here somewhere overall, and then over time, if it's going to move higher. I believe the silver at 120. It's hard to stay up at 120 because there's going to see demand destruction, and a lot of people are going to bring in their silver to sell at that level. So it dropped off. Now the drop off. It's interesting. The gold went down up to the 50% of the move up. Of the Fibonacci retracement, which is kind of a positive from kind of the move in October, November. The gold was about 61%, and that's right where the buying came into there. So I don't look for them to plunging a lot more. The metals, the COMEX raised margins again over the weekend, and so you could see some more selling Monday. Here's the question: is there problems out there with some players in the market? What I believe happened was, I think these guys were in trouble when gold went to 120. I think the London Metals Exchange was running out of silver. I think President Trump, remember Bissett, who do they say he worked for Soros? He knows Druckenmiller well. These guys, they understand, these people understand these big macro movements unlike anyone else in the world. I mean, they're the best at it. And I think they moved up the Kevin Warsh thing to go in and say, hey, we have this guy here. And then people viewed him as hawkish because he did it right as soon as silver was rolling over Thursday. And matter of fact, I was selling some of the SLV that day. We're selling into it. It was rolling over. And then they announce it, right at the perfect time to kind of crash the market down. And I think that was done. It was coming at the end of the month. There was probably deliverability contracts they were struggling with. There's rumors a couple people are in trouble out there. So we have to see, is there anyone in trouble that could push it lower? I don't think – I think for silver – I think the 70, 80, 100, I think the range is going to be closer to 50 to 100. For a while. Maybe it goes up until something else happens. But what you have to understand is with the silver and the gold are these guys, the mining companies make up. If 6 months ago you said, okay, here's what's going to happen, Ted. Gold is going to go up. I own a silver or gold mining company and gold mining company. Silver is going to go up to you're going to get $70 for gold. Keep in mind it was about $35 at the time or something. You're going to get $70 in gold, which was back in August was at about $3,200. You're going to get close to $5,000 an ounce. These guys would be going, oh my, that would be the greatest thing in the world. Their earnings are going to double and triple. I don't think people understand how much these companies are going to make. Understand the analysts out there for their analyst numbers aren't using 150 $1,520 silver and $5,600 gold. Well, I'm trying to get the numbers, but I think the numbers are for gold. If you had to really guesstimate what they're using, I'm guessing it's maybe 4,200 to 4,000, 3,800 an ounce for their numbers. And keep in mind, right now it's about $4,900 an ounce. And for silver, I'm guessing they're maybe using 60 or so at best case. And so I don't think the move is over for the metals stocks. We have to kind of see where they're going to go. But that's okay. Hold a second. But here's the other interesting thing about gold and silver. This is the first time we have seen the Chinese in a market that the Americans are in. Keep in mind, the Chinese aren't buying Apple Computer and they're not buying General Motors, and it's hard for them to buy the average Chinese person. Okay, they're not buying Treasury bills. You're not going and stocking up on Treasury bills. It doesn't look real good. Okay, they can't come here and buy. For all the talk about the Chinese are buying property, they're really not buying much property. But understand something about the Chinese. The Chinese savings rate is about 30 to 32%. Some of the biggest savers in the world. Now, some of them don't make a lot of money, but they save a lot of money. They have, we hear about there's $6 or $7 trillion in money funds that's going to kite up the market, and it's going to, it's like, wait, that, people are happy with a lot of the money in the money fund. They have $23 trillion in their banks over there, 23 trillion. So when they start buying something, they're the marginal player in the world. But we've never seen that because they've never been in our markets per se. This is the first time they're kind of in a market that we're sort of all in together on. And you saw big lines in China. There's rumors of silver funds shut down over the weekend in China. The Chinese government put a VAT tax on. They're trying, but the Chinese they go to the store and they load up and get these kilo bars of gold and particularly of silver kilo bars. And they load up a little hand cart and cart it off. So it's hard to really understand. And if you listen to people at Goldman, they're just now suddenly discovering, and these other people, Americans are going to be, they're selling it here now. It's not the American, it's the Chinese. And so this is something that's very interesting in the sector. Keep in mind, for everything we talked, silver plunged 26% off huge. Look, here's the situation. Year to date, silver's up 17%, gold's up 12%. The Mag 7 is flat, in the S&P 500 and the NASDAQ are up about 1%. So they're still way ahead up, and they're still selling the Mag 7. And we'll talk more about that later. Let's take a call from Bill. Welcome to the Savings Show.
Hi, Ted. Thank you for taking my call. I got to thinking about all of the damage that's probably been done to residential landscaping with all of the winter weather, especially on the Midwest and the Eastern Seaboard and the Northeast states. I got to thinking maybe there's an opportunity there, and I went online, and the only provider of wholesale residential landscaping product that I could find was called Site One. Their symbol is Site, S-I-T-E. I just wonder what your thoughts are on this. And I would just be making a small play. It looked like the only pure play in this arena.
That's an interesting. Let me take a look at that. It's interesting because when you started telling me this, I'm thinking, what? I didn't even come up with that one. That's a hard one. The classic ones are Home Depot and stuff, but if you look at Site One, well, it's about $143. They're projecting they're up 22% growth. They're projecting 447, somewhere like that on it. So I think it's a great idea. I think it's a little expensive in here overall, but overall a good idea. But it's just, it's kind of traded in this range. It seems like it's an expensive stock typically. It's kind of been in that range for a long time. Yeah, I think you could see somebody like a Home Depot or Lowe's buy them. Yeah, I wouldn't say no on it. You're probably going to see a lot of stuff happening because also keep in mind one of the big stories coming up is there's going to be very large tax refund checks coming out from I've seen some of them think might be $2,000 more than the average. And if people get a big check, oftentimes they'll go buy some things to fix up their yard. It's coming right in the spring, right when their checks are coming in, which is the best time to spend. So I think it's probably a pretty good idea. You'll probably make money, but it's expensive. It was, this week it was down 2.68%.
Okay.
That's
well, thank you, Ted. I appreciate
stock.
you. Okay. Thank you.
Yeah, I mean the cold weather is affecting things. Gas prices. Yeah, the biggest when it comes the biggest return this year to date is really natural gas, up 38%, and we continue to like the sector. They're putting in natural gas plants just to fire up the AI centers, and particularly on the East Coast, are warming up to natural gas, pun intended, but because it heats the homes, and it also it can be used on the electricity, and so they're going to be much more open to pipelines. We really like that sector overall quite a bit. So those are some of the question is, I mean, I think a couple thoughts on the gold and the silver. I wouldn't recommend, if you just have a way overweighting of physical gold and silver and you want to sell some when it runs up, fine. Keep in mind you're paying it's ordinary income. It's actually at the collectible rate, which I think is 28%. And then if you're in a higher bracket, there's a 3-point-something% tax on top of it. So it's a little higher tax bracket on that. I would hold the physical if you coins or whatever you have in your safe and safety deposit box. I think those are more for emergencies. Now, if it's a huge chunk of your net worth, I mean, I think you maybe have to consider lightening up a little bit and spreading the risk. But that's kind of my read on pullbacks. I think you could maybe buy the stocks. I think we have to really see how this. We just want to make sure that, based on what I've seen, this thing likely bottomed Friday afternoon in the silver, in the gold. I think the gold's going to be more stable in here. I like the gold stocks more right here because I think that number is a better. If I don't think gold and silver are going to make a new run to new highs anytime soon. I think the bull market is continuing, but I believe it's going to take some time from here. And so I think that's kind of the one thing you have to look at. But if you look at the gold, as we said, I think these guys are going to have just very good numbers coming in from the sector. If you look at, keep in mind, in 24 and 23, gold was $1,800 an ounce. It's doubled in 20, and even if you look at the numbers for I think the average, I would say the average price was $3,200 for gold last year, just kind of a ballparking it. Right now it's at $4,900. So if it goes back to $4,200, you're still looking at huge jumps up in earnings estimates for these big gold companies. I still think most institutions are underweighted gold. I think they're piled into the technology sector, which still looks like trouble. If you look at I'll tell you what, let me see. We're coming up here at a break in just a minute. If you look at we're going to cover that after this break right here on the Max Out Savings Show and talk about our outlook about that and the dollar. Again, a lot of interesting things happening. I think the world absolutely shifted last week on a number of huge moves, and we're going to discuss that. I really think it was a financial earthquake that people still don't quite understand. We'll be right back right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka will return shortly. To speak with Ted Gioka now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
In the 1970s, the big song was the Bee Gees' Stayed Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. Interesting story. There's a Reddit style platform out there called Moltbook. It's exclusive for AI agents, and so it's kind of like a Reddit platform, and it has 32,000 AI agents users, and they're talking back and forth. But one of the more So they can, the bots, they can comment and they can upvote, they can create sub-communities. But then humans started screenshotting what they're doing. And a bot posted, the humans are screenshotting us. They think we're hiding from them. We're not. It just goes to show you just how this intelligence, I believe, is further along. They talk about being sentient. I think this stuff is further along than people think, and we're going to see different. I mean, I think you're going to see positives and negatives of that with this AI moving forward. I think it's going to be very interesting. But getting back to the markets, as we talk at the end of not the week, last week, right before Friday of the week before, or Thursday, the Japanese requested help from the Treasury Department supporting their currency. As we talked about on the show, the interest rates on 10-year and 30-year bonds have been skyrocketing. And they've gone. They're not as high as they are in the United States, but they're still high, and so it was affecting. And the yen kept falling, which means there people are losing confidence in the Japanese system, and so. The Treasury went to the Fed, and the Fed sent out something called request for bid for Japanese yen or Japanese bonds. Now that's like it hadn't happened since 2011, so it's like 15 years. So they're sitting on the desk at Goldman Sachs and wherever at BlackRock, and all of a sudden this comes across the desk. It went right to the top of the company within probably 30 seconds, and and it started stabilizing the markets. But again, it goes to show you now they haven't actually come into the market yet. But the 10-year, it almost mirrored the move up in gold. It started really taking off and this is sort of a in the weeds type of thing, but it's important to understand it. Keep in mind, at the beginning of 24, the Japanese 10-year was at a 0.6%, up from zero. It's up. It hit 234 and 233, and that's when they went and it gapped up big at the end of not this most recent, but of the week before. It gapped up, and then that's when they went in. And so, why this is important is the Japanese are huge investors around the world. And if their currency starts going up and their interest rates start going down, they're going to pull money out of the global markets over to their thing. It's called the Japanese carry trade, because a lot of these guys have been borrowing money at 1.5%, and then investing it in the U.S. stock market or the U.S. bonds and making a pretty good trades. And so that was the first thing that shifted. Then gold shot up and starts exploding higher. And then Trump puts in Kevin Warsh, and they're making this big shift in here. And so again, this is a big shift from financial assets over to a bet on the United States is becoming a manufacturing power that it always was. As they're settling, we need it not just because to help our balanced attainment, but we have to have it for security purposes. Trump, as we talked about earlier in the show, has been pressuring these companies. He said, "Look, I don't want to see you putting dividends. I don't want to see executives making $25 million. I don't want to see you buying back stock and then coming to me and saying, 'Hey, sir, we can't make enough Patriot missiles, or we can't make this other new missile, or we're having trouble building F-35s. We can't meet our production schedule.'" He's kind of like, "Well, what? It seems like you guys got a lot of money over here to be buying back stock, paying dividends, and paying high prices, for your executives. Why don't you move it over to there?" And so that's what they're doing. And so, again, it's more factories, more AI factories, more defense factories, in this case, more AI factories, more auto factories, more drug manufacturing factories, more electricity generation stations, more PPE, the protection, the medical protections being moved over here. All those things are being moved over here. So this big shift is happening real time. The dollar is continuing to fall. This is why commodities are good, because the commodities, the value goes up because they're priced in dollars, so other people in the world can continue to pay more. But at the same time, there's a demand for the commodities because we're building things out. China isn't using as much commodities because they're not building as much, but they're going to start ramping up their defense and other factories. They're going to start converting some of their manufacturing over to defense work there. And so you're going to see this. And so they're scrambling to get silver. The Chinese are scrambling to get silver. The Americans are scrambling to get copper. And all these things. People forget Trump came up with he goes, "Oh, I'm thinking of putting a tariff of 20% tariff on copper. It's going to start in 1 month unless something happens." Well, it was 2 months. So all of a sudden, enormous amounts of copper started filling up the warehouses in New Orleans, and I believe it's Tampa, where the big copper warehouse, they filled them to capacity and were buying other. So copper came pouring in the United States. That's what Trump wanted. Trump wanted the copper back in the United States. The Chinese are doing the same thing. So I don't think this whole commodity thing is over yet. I think this industrialization is going to continue to move forward. I think it's going to be interesting. Then the other thing is the situation with the war with Iran. There's rumors today that there's numerous explosions and there's explosions in numerous cities in Tehran. I don't think we're bombing. I believe that I think there's they got some type of sabotage operation going, and it's likely they're going to probably do something. The reason why I think we're going to do something in Iran is, look, Israel has Trump kind of agreeing that we need to do something about Iran. That only Israel's not going to get another chance to have the United States help them take out Iran. I don't believe. I think they figure, hey, we have this, we have President Trump agreeing this, and we've got to get it done now because that window might close. And so I believe what the United States is thinking in a world where you've got these these $50 billion or more data centers around the country. If Iran gets cute with a nuclear weapon or something, they could wipe out, with just one EMP, they could take out half of our AI data centers and destroy them. They would destroy $1 trillion worth of AI data centers with just one EMP if they were to get these weapons. Now, by the way, that's the good news. If that were to happen, and the only thing that happens is the actual scenarios in that are so dark, it's just unbelievable. And so we can't, in the advanced society, the United States and the world is moving to where it's interconnected, where we have AI, where everything is on the net and everything. You cannot afford to have your grid go down. You cannot afford to have your internet go down, and you can't afford to have EMPs, and you can't afford to have rogue nations running around claiming death to the United States. We're going to nuke you. And it just the risk is too great to the American people, and so I do think something's going to happen over there. And I think it's interesting that this gold sold down just likely ahead of that. I believe that was. I think some people were in real trouble with deliverability of particularly silver, and I think they crashed the market to protect those people. But I don't think this is all over. And I don't think the commodity trade is over at all. And I think a couple things you want to watch. You want to see where's the dollar. The dollar's at 97.14. It broke down actually earlier in the week. It broke down from support and it only came back on Friday once Bissett came in. Once they announced Kevin Warsh should come in. It had broken down levels not seen since 2022. So what I want you to understand, this is all much more choreographed than people think. But the difference from what we've seen in the past is now is President Trump has the best secretary probably in 100 years in a position that understand they're not going to make stupid moves. Whereas in the past, all they do is they announce they're going to start buying back corporate bonds or some ridiculous thing. I want to say it was 2020. The Fed came in, they're going to buy corporate bonds. We were in there trying to buy corporate bonds for our clients, and we were calling every day to the trading desk at Schwab and we're like, look, can you get us we told them specific bonds. I'm like, we can only get you this many bonds. We can get you these bonds at 78. The next bid is 84. Well, I said, let's hold at 78. Go to 78 and half. If you had to get me what you can, and it became clear to me is we were battling some pretty smart people that are doing the same thing. Well, then all of a sudden they announced that the bid was going to the Treasury was coming in. Well, we were preparing, and a lot of other people were going to buy all the bonds that were if you rely on the free market system, they're going to come in and support particularly corporate bond markets, and if you let the free market system work. So Kevin Warsh is more likely going to be like that. Bissett is going to be like that because what they want is they want the Federal Reserve operating for the best interest of the United States and dollar and the United States, not the financial system, but the economy of the United States. So they're more likely they're not going to be as quick to bail out Wall Street, and people view this as a positive. This is why the dollar came up from a breakdown that was a 3-year breakdown in the dollar, and as soon as Kevin Warsh came out, because people respect the guy. So again, I think these are bigger issues happening in the market. We're going to be writing about this. We're going to be doing a lot of research over the weekend, but we kind of want to wait and see what's going to happen over the weekend. What's going to happen with Iran? What's going to happen with the precious metals market? Are there problems there? And the other thing we want to watch is are the Asians just going to step back and say, oh, wow, we made a mistake. We're not buying any more gold and silver. We don't think that's going to be the case. And what's going to happen in Japan is how is the yen going to hold up? Is the carry trade going to start unwinding? And is that going to cause other problems out there? And so we're not as big fans of say, the Mag 7 in these big tech stocks. Here's the other thing that's happening is over the last couple of weeks, we've heard that XAI is going to possibly go public or be purchased by Tesla. We've heard that SpaceX is going to go public. We've heard Anthropic might go public, which is a big AI company. We heard that ChatGPT is going to go public. We've heard there's a number of these big companies, and these companies have $300 billion, $400 billion, $800 billion or more market caps on them. So when these guys all come out, the problem is in the tech sector, money managers are going to have to say, well, okay, I'll take some of this. I want some XAI. We want to be in ChatGPT. And so then they go, well, where are we going to get the money for this? Well, they're going to be selling off Microsoft. They're going to be selling off Meta. They're going to be selling off Google and these other ones that are in the NASDAQ composite. And this is why you're seeing these things, because everything is working against these big tech companies. Their CapEx is rising dramatically. They're not sure if it's going to work. Their debt levels are going up. They're having to reduce the stock buyback programs, which in many cases have actually kited these stocks up to artificially high PE ratios. And now money managers are going to need to find cash to buy the new things, new companies coming out in the market. So a lot of interesting things happen. I think in this market, you want to, again, have a higher level of cash. You want to keep your bonds shorter term. You want to be in the commodities, the precious metal, the oil and gas, those type of things. And remember, by the way, what did President Trump give with that Venezuelan oil? He brought it to the U.S. to stockpile it. If there's going to be a problem in the Middle East, he's created a pool of oil for us here in the United States. Something to think about. Anyway, we write about this in our free Max Out Savings Report. We send it out once a month talking about these issues. It's called the Max Out Savings Report. We try to get you ahead of all these big issues. Just go to our website, maxoutsavings.com, and sign up for the free report. In addition, if you need help managing if you're retiring, if you have an old 401k, we manage retirement money at Max Out Savings Advisors using our value investing approach to the markets. We hold our assets at Charles Schwab, and then we manage it for you. So if you need some help, you can go to the website, drop us an email, give us a call. We'll set up an appointment. We're here in Houston, Texas, and we'd like to help you out. I'd like to meet with you. So just go to the website if you get a chance, maxoutsavings.com. In addition, final thing, remember our motto and philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. Save aggressively and invest conservatively. That's going to protect you from volatility in the market. That's going to protect you from problems with the government blowing up or the dollar collapsing, because the more money you save, the better off you're going to be. Anyway, hope everyone has a great weekend.
A presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.
AM 1070.